This is TechCrunch. Weeks after stepping down as the CEO from food delivery service Zomato and its parent Eternal, Indian entrepreneur Deepinder Goyal is back with a $54 million raise for wearable startup Temple, part of what the 43-year-old earlier described as a shift toward higher-risk exploration and experimentation. On Friday, Goyal said in a post on social media that Temple had raised funds in a friends and family round from founder friends and early Zomato backers at a post-money valuation of about $190 million. More than 30 employees participated at the same valuation, he said. Goyal stepped down as chief executive of Zomato and its parent Eternal back in January, handing the role to Albinder Dinza, who leads the quick commerce unit Blinkit. Now, the move marked a major transition for Goyal after nearly 2 decades at the helm of the food delivery company he co-founded back in 2008. Temple is one of the clearest expressions yet of that shift. The startup is focused on building a high-performance wearable for elite athletes, an area that Goyal has described as ripe for deeper technological innovation. During a January conversation with podcaster Raj Shamani, Goyal described Temple's wearable as a sensor designed to sit on the wearer's temple and continuously track cerebral blood flow. In a separate post on social media on Friday, he said Temple aims to build what he called the ultimate wearable for elite performance athletes, claiming the device would measure metrics that existing wearables cannot. He also outlined an expansive hiring push spanning embedded systems, computational neuroscience, and brain-computer interface engineering. The startup is entering an increasingly crowded and well-funded wearables market, where companies such as Whoop, Aura, and Garmin have spent years refining devices that track sleep, recovery, and athletic performance. Now, whether Temple can meaningfully differentiate its technology remains an open question. The push into Temple is part of a broader shift in Goyal's investment focus. In October of last year, he said he had committed $25 million of his own capital to another venture, Continue Research, which is exploring ways to extend human lifespan. He is also a co-founder of aviation startup LAT Aerospace, which recently expanded into defense technology with the acquisition of early-stage firm Sharang Shakti. Goyal built his reputation at Zomato, which he co-founded with Pankaj Chadha, and spent nearly 2 decades building into one of India's largest food delivery platforms before stepping down as CEO earlier this year. Chadha exited the company back in 2018 as Zomato continued to consolidate its position through acquisitions, including the purchase of Uber Eats India business in 2020 and grocery delivery platform Blinkit, then known as Grofers, for $568 million in 2022. Before Temple, Goyal had also backed health and fitness startups including Ultrahuman, an India-based wearable maker that competes with Aura's Smart Ring, underscoring his growing focus on performance and health technology. Well, continuing along in that same vein, Ultrahuman on Friday unveiled a new smart ring with longer battery life and a redesigned form factor as the Bengaluru-based wearable maker seeks to revive its U.S. business that was disrupted last year by a patent dispute with rival Aura. Now, the Ring Pro, Ultrahuman's third-generation smart ring, offers up to 15 days of battery life, compared with, say, 4 to 6 days of the Ring Air, and it's priced at $479. It will be available for pre-orders globally, excluding the U.S., with shipments beginning in March. Ultrahuman's U.S. business was disrupted last October after the U.S. International Trade Commission, a federal agency that handles trade disputes, ruled in Aura's favor in a patent dispute. That ruling prevented the startup from importing new ring inventory into the country, although existing retail stock continued to be sold. The blow was significant. The U.S. accounted for about 45% of Ultrahuman's roughly 700,000 daily active users worldwide. That's according to co-founder and CEO Mohit Kumar. In August of last year, Ultrahuman also filed a separate patent infringement case against Aura in the Delhi High Court, where the matter remains pending. Meanwhile, Kumar told TechCrunch that to work around Aura's patent, Ultrahuman developed the Ring Pro with a new design, adding that the device had been submitted to the U.S. Customs and Border Protection for clearance to confirm it can legally be imported into the country. Despite the U.S. disruption, Ultrahuman is currently operating at an annualized revenue run rate of about $150 million. It reported $64 million in operating revenue in the financial year ended March of last year. The startup remains profitable after tax, although margins are expected to narrow due to litigation costs, tariffs, and the redesign effort. Women account for about 68% of Ultrahuman's user base, up from roughly 65% a year earlier, reflecting strong adoption of the startup's women's health features. Ultrahuman also offers subscription-based services across its broader health platform, including a coaching and recovery program called Power Plugs, the Blood Vision Metabolic Panel, Ultrahuman Home, and a continuous glucose monitoring offering. Subscriptions contribute about 16% of Ultrahuman's revenue, while Blood Vision accounts for about 5% of the business. Ultrahuman's key growth markets include the UK, Canada, Australia, and India, with the latter contributing to about 9% of overall revenue after recent investments in local customer support. Global smart ring shipments grew nearly 80% year-over-year last year, driven by demand for compact wearables with advanced sleep tracking and longer battery life. Aura continues to lead with more than two-thirds of the market, while Ultrahuman holds the second position. That's it from TechCrunch. For more stories like these, go to TechCrunch.com.